everyone. Welcome to the Finance Story, and I'm your host, Vishal Krishna. We're a leading digital publication that celebrates and captures life in finance. Our series titled Finance 2022 and Beyond, powered by Capita, aims to inspire young and old CEOs and employees alike about this new world order that has emerged thanks to COVID-19. Today we have Raghav Swaminathan, the CFO of Wipro Enterprises. A little bit about Raghav. He finished his CA in 1995. He's been with Wipro for 18 years and was also in GE for a while. Hi, how are you, Raghav? Welcome to the Finance Story.
Hey, hi. Thanks, Vishal. Thanks for having me here.
I'm really interested in knowing the backstory in every interview. Why did you choose CA? You started off at General Electric. How was it like for a young CA to go into an MNC at the time? What were some of the experiences that you had? Sometimes people just, like you said, it's a generalist thing. You're a CA. You can do many things now, but you've got to choose a path, and you have to literally earn that path. How did it happen for you?
So I'm very thankful for the journey. I think today we tend to kind of templatize that and say, look, do this, do that. But I think everybody's journey is unique. And if there's one takeaway I have is don't really compare yourself with others. I mean, your journey is very unique to yourself. But coming back to your question of saying, how I think General Electric, without doubt, is the alma mater for me, was the alma mater for me. I worked with a great set of managers. So 3-4 things which stand out. One is within the first year, I went to, they sent me to Fairfield, to handle their corporate treasury. I went there, my manager went on maternity leave. So I ended up handling the treasury function after 1 year. We are talking $2 billion sitting out of Fairfield in Connecticut, doing that. So much so, and I remember this, the global treasurer actually said, I've done a fabulous job. He gave me $1,000 check for that time. So I had a great run. I mean, I had a great run with GE. I think so that was the kind of managers I've worked with, great mentors. And the second thing was doing many things. The first 7-8 years are very formative. And for me in GE, that was that, I've done audit, treasury, I did FP&A, then I did pricing, then I did manufacturing finance, then I did commercial finance, then I did commercial pricing. So it was a good journey, and GE was such a company that it allowed you to explore what you wanted to kind of do. I still believe, I don't know about GE today, but at that point in time, they had this great ability that if you're interested in a job anywhere in the world, you could basically kind of apply. It was quote unquote your LinkedIn of or some kind of a way. There's a job portal if you want to go and apply for.
So they had something internal. Nice.
Very internal, yes. But I would use that. Do newer things because and get out of your comfort zone. Every role which I did clearly was not something which I had done in the past. So I use that as a metric even today to say, can I do something which is different? Absolutely, you should basically kind of do that. And then you basically, I came back to Wipro because there's a small stint that I'd done with Wipro GE, and then the CFO here.
Back then there was that partnership. Yeah, I remember.
Yeah. So, and then, they wanted me to come, that CFO was saying, whether we would come back to India. I had spent some time there, and then we wanted to, and then I thought I'd go and work in the IT industry because there's IT industry boom was happening in India. And I also wanted to come back because my folks were getting old at that point in time. I thought it's a good thing to just, be with them. And then, to be part of the journey. And then
was it the Wipro GE healthcare project that you were part of at the time? Yeah.
I did stint there. Yes.
Okay.
But I came back to Wipro Limited, which is the IT business.
Okay. And there, and you grew, 18 years there, it's phenomenal. And you continue, now you're obviously CFO of Wipro Enterprises. I think obviously Wipro would have great processes to fast track leadership, right? How did you go about it? Was there reskilling as a CFO? Like you said, you started off as a CA, it's a very generalist thing. You have to specialize as you get into, leadership positions. What did you do?
So, I didn't really plan it so much ahead, but when I look back, I can basically say 2 things. If I was to guide people and just look at it, is to, do all the core functions. do stints in the core functions, treasury, taxation, controllership, FP&A, audit, try and cover ground in the next, and that actually fortunately happened for me. But if I look at it, that's a great way to, just broad base yourself into 5, 7, 8 functions which you have done. So that's one aspect of it. And the second thing is try and do a couple of roles which are not very core finance. It could be dealing with customers and dealing with, engaging with customers, more commercial oriented, where it's more front facing. And the reason why I say this is because when I came onto the IT side of the business, IT was just growing around 2004-5. I mean, it was growing a lot, but that was a time when we were talking about total outsourcing deals, big $150 million deals, Indian IT customers were doing. Based on all that experience, I was able to kind of navigate myself in driving these $100 million, $200 million deals with clients, because you have to be comfortable speaking to clients, understanding their core architecture, what is it that Wipro is able to kind of bring to the table. I think some of that experience had really kind of helped me do that. The second aspect, of course, is soft skills. I can't overemphasize that. So find people whom you kind of work with. And I think it's fairly cliched now, but you work for managers, not for organizations, right? So when you go and try and say, look, I want to go and work for this guy for a couple of years, this guy or girl or whoever it may be, right? And they can teach you many, many things other than, which is not just your function, but they teach you many softer aspects of how do you really drive leadership? How do you set an agenda for yourself? How do you follow up? How do you make notes? So a lot of these aspects start to count when you become more senior. Your written communication, your oral communication, what kind of, how you're able to crystallize issue in about 2 minutes. And this is not something which you can learn from books. This is something which you learn from dealing with the kind of people. So just to summarize, look, focus on your core areas over time, focus on the people you want to kind of work with, invest that time. And then, try and build some of these softer skills as you kind of go along.
Music to my ears, simply because you said write notes, and you can surmise those notes and use it for your advantage.
Sorry, Vishal. And I tell you, just my experience, I know a couple of people who left me and went to startups, and they came back because they said that, look, I want to work with you because I'm lost in this huge space. But I want to come back. I'm okay. It's not paying me great bucks, but I just want to kind of work with you. So even in today's generation, while we like to kind of discount them saying everybody's going for money, if you're able to create that value for people, they will do that. Yeah, they'll come back and work for you. So
you're in a global company which has 40 plus brands and several manufacturing facilities. I think you have over 400 plus clients, right? When you go into that world, the world today is Web 3.0, like we were talking about it earlier, and the problems with communication and D2C. The world is about influencers. The world is about having more likes, impressions, and all that, right? When you look at all this in an all-encompassing manner, how do you always plan yourself? Say that, okay, how can I keep myself contemporary and yet be practical and not be sold by the narrative?
Sure. The one big plus of the new world is the democratization of knowledge.
Correct.
Truly, I think it's the most powerful element of where we are today. So anybody can be an expert on anything just by reading on the internet. So the way I look at it and how I have kept myself is, I read a lot. Okay. My morning time typically starts as soon as I get up, maybe in about 15, 20 minutes, I will look at my Twitter feeds. I follow some 560 people. So at an instant, today you're able to understand what they are saying. You can use Twitter, whatever ways you want to basically kind of funnel that information into you. You should, figure out whatever works for you. The second thing to make yourself more contemporary is, I think reading is the first thing, then you review it for yourself. at least the more interesting ones, what you think is relevant for yourself, you review on it. Then you reflect and internalize on it a bit more. Okay, you kind of reflect and internalize it. And then you try and tell this to somebody else within the organization. So you go through this process of sifting all that information, taking it back to internalizing it to yourself and playing it back to the organization. That to me is the complete cycle of how leaders should basically operate in a world where things are changing very, very fast. If you're not personally well read, you're going to have a challenge of really taking it back to the organization. One of the things which we do more, crazily in our organization is, benchmarking with competition. I'm not a great believer that you have to be the first one outside, doing the first thing. Yes, there is an early mover advantage, but today technology is such that it used to be that labor, capital, or mobility, all that was a competitive advantage. But truly, it's skills which are really an advantage. But more importantly, how you're able to internalize that into your organization. We track a lot of competition, what is kind of going on, and how do we really kind of do. So, for example, if I'm in my FMCG business, I probably cover all the analysts one-on-one over the quarter. What's actually happening? What is this company doing? What are they, driving on? So you start to kind of assimilate stuff. And then, 2-3 things which you think make sense, then you go and basically kind of deep dive and figure out. So that broadly, in a way, looks at basically how do you be wired and connected to what is actually kind of going on. Yeah, you have to be wired. Check with your stakeholders. I keep checking with the CFOs of the FMCG companies or industrial companies to basically kind of understand, how do you really manage, what you kind of do. And nothing is really, I think this whole thing about competitive advantage. I mean, I would say competitive advantage can actually really be in today's world at best for 6 months. It's so easily replicable.
Okay, as a CFO today, they say that a CFO is so strategic that they also have to have a view on technology. Do you take a view on technology yourself, or do you rely on your IT, CIO, and CTO? What is your process of managing with IT?
No, absolutely. Whether you're a CFO or whether you're any other person in the organization, you have to be a technology evangelist. Otherwise, you're out of a job in the next decade and the next 15 years. You're not going to be relevant to whichever organization you're operating in, right? So how do you really become a technology evangelist? So obviously, I think the word you mentioned, curious, understand what's kind of going on. I think the role of the leadership, especially for a CFO, is translating that to the board, translating that to internal stakeholders. My CIO might come back and say, look, I want to take it to cloud, do something, drive these 5 things. But how do you take that and narrate that story in a very simplistic form to your board and to the stakeholders to basically say, look, if I do this is what I will actually end up kind of achieving. Now, I'll give you an example on that. We are driving the biggest sales transformation globally for us, on the FMCG side of the business. It's been a very intense exercise. We've been dealing with it, speaking to consultants, understanding and all that. Now, I have the time I'm spending to understand the intensity, what will we do in week 1? What will we do in week 2? What will we do in week 3? Trying to get that narrative very clear, because there are 2 things from a technology standpoint, and most people, I think people get it, but not maybe strongly enough. One is, don't do technology for the sake of technology. That's number 1. You should not, just because someone else is doing it doesn't mean you have to run after it. So set context for yourself. Second is, do not underestimate the change management. I could tell you that, download this app and start, doing this or doing that. But if you're not a person who's grown up in that ecosystem of environment, that's why, how does a 20-year-old do things much faster, right? Because they just wired on it. They just grown up with that. So don't underestimate the change management. You can have the best technology, but if the change management is not driven with the DNA of the organization, it's going to be a failure. Because you would have spent on the technology and you would continue to do the old ways. And so basically nothing would have moved, right? I think so technology, you have to continue to make it relevant for your organization as you move forward. You're not the expert in this room. There's no way you're going to be the expert in this room. In your board or anybody else, then you're not going to be the expert. So have the humility to go and tell boss, please tell me what exactly this means. How do I do this? What should I do? That's the only way you're going to be able to kind of learn. Like in the earlier version, I was saying that you have to work with great managers to, or good mentors, but work with great youngsters to be able to tell you what is making sense. They will tell you, and they already know because it's their DNA to know. And when you go through this, I was telling you, you read, you review, you internalize and all that. It takes time to get to the insight. It takes time. The experience allows you to spot the larger picture much faster because you're able to connect the dots, specific to your organization. It may not allow you to spot the connections in technology per se, because a 25-year-old can tell you that, it's much, he or she is going to be much faster. But insight is a powerful thing, because why insight becomes very powerful is because always for leaders, CFOs, there are strategic choices to make. And I can tell you, after having done so many M&As in my career, it's not the DCF or the Excel sheet which is driving the decision. It is something much deeper. I think the base financials or whatever you're looking at is just what I call the threshold, which you basically kind of get through and say, look, this is actually starting to make sense. The choice which you make is an insight, which is actually synthesized in your consciousness to say, look, when you're connecting the dots and saying, look, I want to be able to kind of enter into Brazil because I believe the long-term bet, which I will do into entering into Brazil, is going to kind of make sense. And let me tell you, we entered into our industrial business in Brazil many years back. We tied up with a joint venture partner and all that. And the last, and then after we acquired for a couple of years, it was not doing well because the economy did not do well and all that. But when I look at the last 3 years, they have had a fantastic run. So, but it was a strategic choice which you basically made of entering Brazil at that particular point in time, which is not going to get justified by financial alone, but you believe that, look, this is the right thing to kind of do.
This is real insight to me, because you're right. Is there a diary that you keep pace with, that this is what I have to learn today? You mentioning that the roles are becoming so diverse. It is so strategic the way you're putting it. How do they hone their skills in such a case, right? How should they go about doing this?
I wish I could show it to you, but it's not around. It's somewhere in the back. But it's around. I do make notes. I do make copious notes. In a day, I will end up jotting down at least 10, 11 points, which has come up. And I would circle them back and say, look, somebody would have discussed something in a meeting and basically said that, this particular topic. And then I will say that, do I understand the next level detail of that particular topic? And I will say, I don't. So I would circle that as something for me to go back and investigate and go back and understand what exactly it is. Now, the second thing is also, don't overload yourself. Don't kill yourself to say that, look, by the next 6 months, I want to be an expert in these 7 areas. You cannot be the expert in 7 areas. Pick those 2-3 things, deep dive, and you'd be okay to basically kind of do that. So
my next question is going to amaze you even more. We get these questions at the Finance Story. People say AI and blockchain is going to replace the role of the CA, and it's going to make us redundant. What are your thoughts on this?
Totally agree. I don't think it is going to make you relevant, but as I said, you have to look at yourself as a generalist in the future. That becomes very important. But, I have to tell you this, Vishal, I'm a great believer in blockchain.
Okay.
Blockchain does Three things, three, four things. Um, it establishes trust with completely two people or two sets of things who don't know anything or who don't know any or have no connection with each other. It establishes traceability. It establishes auditability of that. Okay, that's a technology at a very fundamental level. And you're seeing crypto, everything. There's a plethora of applications which is basically kind of happen. In the next 10 years and 15 years, what will happen? And I come back to this in a very, very simple example. Let us say you're buying a land in India or buying an apartment in India. Today, you have to go through a bank. You have to basically go through the whatever, you go through
multiple parties,
multiple parties, your credit limit, your income level, everything, right? All that is basically, the entire thing will basically merge in the future. As I see it today, I'm 200% sure about it. I could be wrong on the timing, but it's going to change because blockchain technology, large scale adaptability will come when you know your income level, when they don't have to even meet you at all. Lending, they don't have to meet you at all. If you're buying, if the registrar, you don't have to ever go to the record, everything is there. The entire technology has to get adapted on that. Fundamentally, blockchain will remove all intermediaries. That is the power of that particular technology. It will remove all intermediaries. So take a step back and say, intermediaries in your life, 20 years, they're all gone. So the answer to your question is, does it mean that blockchain AI will remove CA's job? No, what they're doing today for sure. I'm saying more and more shared services and kind of do that. But that's why I'm saying don't label yourself at that. CA is a course which allows you to become a generalist, build on that particular competency, focus on areas which you think is relevant for you and start building your way around that. Build critical skills, build skills which you think is relevant for you. If you're doing a CA and going to pass vouchers, if you're going to do CA and pass something which is more transactional, yes, that job is gone in the future. So all technology goes through that curve of large scale adaptation. How and when that will happen? Actually, interestingly, we did a blockchain transaction for our trade in Southeast Asia for some import and export, and we had to get the banks together and all that. It looked so painful, but I'm looking at large scale adoption of that. So where is the job? Whose job is going to go? The guy who's passing import bills.
A lot of reports of the Great Resignation in 2022. And I think a lot of people want to work from home. They don't want to come back to work. So how do you see that Great Resignation panning out? Or is it just one of these terms that analysts use, to sell their reports, right? What about your experience? Do you think it's real, or is there a solution to this if it is real?
No, it's a good question because I'm seeing resignations in that question. But when I used to live in the US, we were part of a community in Midwest, Ohio. A lot of friends in the community. They were not very curious. What do you do? What is the big thing you're doing? Or what is the next thing you're kind of right? And to me, there were 2-3 key takeaways. The discussion around that particular point in time was what kind of interests I had, what kind of food we cooked, what are your cultural other things, right? They used to hang out with you because were you an interesting person or were you not an interesting person? Bottom line. Of course, and I'm generalizing this for effect, but I'm just trying to give you a kind of a view around how I experienced it. So when you come back to this Great Resignations, what did it teach me? What did it teach me as an individual going from India, where I know from day one that you have to be getting a job to actually succeed in your life and do this. And every third conversation is what do you do when you get married? What do you do in your work? When you do, what is it that you do? The next conversation in India is what do you kind of do? Largely in the US, my experience was nobody really cared what you did. As long as you did what you did, it was meeting your economic development. Fast forward now. What is really the Great Resignation? Historically, we have tended to define ourselves in terms of what we kind of do. Okay. And with the passage of time, at least in the developed countries, because of their per capita GDP and because of their income levels, it's not their biggest issue coming out saying that I want to be earning so much. You find in Americans, a lot of people take sabbaticals, do things in their own stuff and like that. If you go back to India 10, 15 years ago, nobody really kind of did that, right? Who will take a sabbatical, right? I mean, you just had to work and keep moving to the next thing. So the Great Resignation is really about the coming together, especially with the generation coming in, just in terms of what they really want to be able to kind of do with their life. And income is not the biggest driver. So they want that. They're not getting defined by what they are working from that standpoint. So obviously, I think the pandemic maybe triggered that. They wanted to kind of go and figure that out. And therefore, you call that as a Great Resignation in some form. People are just reviewing their life choices in terms of what they wanted to basically do. It getting translated into the second axiom around it is flexibility. Are you going to basically get me to, give me flexibility? Are you going to be able to kind of do that? And are you going to do that? I think the Great Resignation in that sense is really just the happening of that in some sense. The remote working and flexibility is just one part of it. But I think the generation shift, if you really look at it, is really about more purposeful living. Am I working and I may choose to work for an organization which is I'm so inspired by. And then for me, it is not about really the hours but the organization gives me the flexibility, but I'm ready to lock in 14 hours, 15 hours for that organization because I'm committed to that cause of what it's trying to drive and what it's trying to kind of do. So that's the way I would kind of look at it, just more purposeful kind of an engagement. That's what people are basically kind of looking at. As it relates to India, we are not there yet. I think the pandemic, we are a poor country. Let nobody tell you anything otherwise. 80% of this country is in poverty, in various stages of poverty.
Correct.
Right? And there is this generation which is coming now where the parents have done well in the next generation. They're not thinking about money. So for them, this question is starting to raise, but it's not the majority in India. For an average Indian coming in, it's still about trying to get the education, do something else. But let me tell you this, from an Indian diaspora standpoint, or the kind of people, the diversity standpoint, the people in India, lot and people are doing things which they want to do, which was not the case 15, 20 years back. So I wouldn't call it this the Great Resignation, but it's really Indians trying to find, purpose in what they do. Can a job, which is not a CA, doctor, something, can it pay for itself? Yes, absolutely. That's the way I would. It seems very, that's the way I would look at it. It seems very kind of magnified now because of the pandemic. But I would think this is a larger trend as we kind of go forward.
No, that's my next question was just about that. In the old days that wanted to be a doctor or an engineer, obviously CA, MBAs or management that followed. Now you can do a startup. Everyone talks about startup in India now, especially with the TV shows that are, shown around. Have you ever had the urge to start up? Did you ever think you wanted to start up? Did you ever think that you could pull off one?
Well, before it was called many years ago, I was trying to do that. After the initial many years ago, many moons ago, where I wanted to do something on when I really never wanted to do something. I was just too secure in my job and just basically kind of more than anything else. I was having fun with what I was doing. So there was really no urge to, shake that out. Though a lot of startups have approached me in the past saying, can you come in over, can you kind of drive this? Can you? I was even the big names. Obviously, I don't want to tell that in a public forum. But I have never been very enthused about joining in a fund or doing something because I felt that what I was doing was so rich and actually rich. Just the content of what I was doing was so rich for me that I really never felt the need to kind of do that. But there are three things which we did for me personally and what it meant professionally, and then I'll answer the other question of startups, which you have raised a question on stock options. A few years back, I had gone back to my board and basically said that, look, I think that we are a traditional organization. FMCG startups are the, I'm starting to grow. We need to understand what they do, so we should start investing in them, right? So we put a policy note on that, got the approval of 200 crores, and went ahead and started investing in basically startups. So that allowed me to start to interplay with startups. And when part of the investment committee, I deal with a lot of startups, just in terms of what their challenges are, what is the brand and all that. And there's 2-3 things which basically stand out. One is, and at least from an FMCG standpoint, they're very passionate about the product. They're very passionate about the mission of the brand and all that. So that's clearly done. Where they struggle mostly is around the scaling, the scaling of the startup. How do you really scale a startup? I think that is very unique for each startup. So that is something which we debate a lot on, how do you really kind of scale? So that allowed me to interplay with the startups, learning from them a lot. In FMCG business, it is about how you are planning your product weeks, days, or something like that, right? In a startup, it's in minutes. What's happening every minute? What's happening on social media every minute, because that's where their lifelines, right? So the speed at the velocity of a startup is just not comparable. And that's why we have always decided that we should keep the startups alone, because if you assimilate them too much into our organization, we will kill it. We will not have to be able to operate in that same particular speed. So that was a great learning for me. In some sense, I'm fairly networked into these startups. Understanding what are the challenges allows me to use my experience to interplay with them in some sense, right? And that has been very professionally full. I'm very thankful and grateful for the opportunity with some of these startups come back to me. And I know that over time with my own interaction, I'm able to add value, not maybe the speed of it, but maybe in many, many areas of what we can do and cannot do. One is, for every startup which is succeeding, there are a lot of startups which are failing. So that is the ground reality. So you got to kind of remember that. What is funding this? So if people are working to startups, absolutely take that experience. And I go back to my earlier thing about saying go for experience all the time. It will help you if it's really good. Enjoy that experience and basically if you're able to make money out of it, even better. I mean that to me is a great success story. But I just want to tell everybody that that's not the case for 99% of the population. But yes, for the 1%, right time, right place, right startup. You can actually kind of, if you're able to get into it, great. But there are 2-3 things which most people don't understand. We are now at the end of a decade of low interest rates. Okay. Why do you see so much money coming into the startups in the US and into India? Because we have been at negative interest rates in the US for a very, very well, and the developing and the Europe for a very, very long time. A lot of the money has come into startups. If you've been following the FOMC, which is the central bank in the US, they are starting to firm up rate because inflation is running at about 7-8%. They have to start, increasing their interest rates. There will be an impact, and funds will start to kind of, go dry up a bit. Not that good startups will not basically kind of get money, But what did this interest rate regime do was, look, I'm going to put my money, I can borrow that money there and actually invest it in stuff, because I'm, one startup does well, I'm going to be able to kind of make my money. So that's what has really kind of happened. That's funneled a lot of startups in some form. And people taking more and more solid bets on that, which we will have to wait and watch as we kind of go along. It is not to say that, so I think at least there would be some moderation in the amount of money which is basically kind of coming into startups. But that's something which we need to basically kind of watch out for as we move forward.
It's interesting you say that, because a lot of the news on a daily basis is about how many unicorns we've had. But like you said, between every unicorn, there are about 10 failures or 20 failures or 30 failures. Nobody knows. And the money could really dry up fast there too.
Yeah. But, having said that, I'm super excited for the startups which have come in India. I think it's, I'm very happy, even for the unicorns to come in India. I'm a more traditional finance guy. And that's why I love startups. I tell you, my traditional M&A, I would be looking at the discounted cash flow over 7 years and how much cash I'm making. Okay. I mean, I'm a big cash person. If you don't have cash, you don't get an opportunity to meet me. But startups changed that for me. I had to relearn and rethink and assess, how do I value a company which is going to bleed cash for the next 3 years, 5 years, right? That's a rewiring which happened to me. And today I have a frame of how actually I can do that, or how I will do that. Because I will look at other host of auxiliary, or what I call host of
market opportunity.
I'm sorry?
The market opportunity. Look at the entire market opportunity.
No, I will look at proxy, what I call proxy indicators.
Yes.
So it's not my financial indicators, but what I call proxy indicators. And internally we have developed a template to basically say, look, when I take the run rate of this particular company and apply the proxy indicators over the next 2 to 3 year period, am I going to see an uplift on the valuation of the company? While I know that I'm going to be bleeding cash for the company to basically kind of get there. That's fairly well, I would say documented, or there's at least in the leadership in this company, there's a good understanding of that.
5 trends that CFOs should watch out for in 2022. You've already given us a cue on startup investing, and watch out for the rates. But what do you think about the 5 most important trends going forward?
I'm going to start with something which for CFOs to look at. I think regulations around privacy, digital is something which for people to basically kind of look at. I think that's very important. RBI has come up with loan currency in India. You've got to keep looking at privacy, and because there's going to be more B2C. So understand regulations well. This will impact your business. The second thing is something which I truly believe in, and therefore I'm telling this to you. Rate of change in your organization has to be greater than or equal to the rate of change outside. How do you measure this for yourself is context to the business which you're operating under. But if you're not disrupting yourself faster than what's happening in the marketplace for yourself, I think as a CFO, you need to basically understand that dynamic very, very well. I don't know, depends, applies to all businesses, but rate of change has to be fast. So you got to kind of keep pressing the pedal within the organization to say, what is the factors which is basically kind of happening? Is my rate change fast? Which is basically kind of happening. I wanted to basically say technology disruption is cliched, so don't get into it. Understand the context for your organization. Don't just do for the heck of it. But I got to come back to and talent and things like that. Was important 20 years ago, it's important now. So how you manage your talent, I'm not getting that. But the important thing which I really believe, which people should do, is network. Network like crazy. And I go back to this thing of people, if a 25-year-old wants to take a meeting with you, meet him or her. They may bring in a context which you never thought about. So network with not just your customers, network with your colleagues, network with a larger community. Understand this is a community game. And if you increase your catchment area of knowledge through the internet and the people whom you deal with, in the long term, that's the only competitive advantage you might have.
Yeah, that's again, like I said, ladies and gentlemen, this has been one of our finest conversations, and we certainly want to have Raghav back again. Thank you for watching The Finance Story, and thank you so much, Raghav, for being on this program. It was lovely to have hosted you. I'm going to go back and watch this interview again, simply because of you've given us such global cues. I'm sure not just CFOs and finance professionals, but everybody would have to watch it. Thank you so much again, once again.
Hey, thanks so much thanks Vishal, thanks to The Finance Story. Thank you very much. It was great chatting with you. I have totally enjoyed it. As you rightly said in the beginning of the conversation, it's going to be a conversation, and I really enjoyed having this conversation.